Welcome everyone to today's presentation on mobile home park investments. My name is Jack Martin. I'm the co-founder of 5210. And as we get started today, a quick disclaimer, this is an educational presentation. So before you choose to invest, make sure to get all of your questions answered and read the offering documents. The goal of today's presentation is primarily educational. So the hope is that after we're done spending time together, you have a better understanding of what mobile home parks are and why they deserve to be looked at through quite a bit different lens than traditional investments or other real estate investments, but also what you should be looking for as an investor. So even if you choose not to invest with 5210, I hope we can leave this presentation with some perspective around the things you should be looking for when evaluating an investment of this type. A little bit about 5210. That's me on the left, and that's Nate Pattee on the right. We were both born in the Midwest. Nate was raised by a pair of school teachers in Indiana who owned a small portfolio of real estate. So he kind of grew up in the business, changing out hot water heaters and fixing roofs and reconditioning units. And I was born in Minnesota into an extremely large family. We had 17 children in our family. So I learned at a very young age that if I wanted something greater than what my parents' budget could accommodate, I just had to go earn it myself. So that classic Midwestern work ethic was a culture that Nate and I were raised in. So we had the good fortune of working together for many years prior to forming 5210. And we were able to be exposed to each other's strengths and skill set, but also to understand each other's character and those Midwestern core values. So I share this up front because I believe that one of the most important things to get right, it could be the most important thing to get right when you're evaluating an investment or any kind of relationship, is the people. So even though those of you who are watching today probably don't know us yet, when you get to know us, you'll discover that that underlying Midwestern culture that we were raised in is a very powerful impact on the way that we behave and how we act on a day-to-day basis. So lesson number one, make sure to get the people right. It's the most important thing in any investment. So when Nate and I were forming 5210, or we were architecting it, we looked back at the crash of 2008, and there was one investment that really stood out to us. It weathered the storm through the great financial crisis better than anything else. It outperformed all other real estate, and it continued to be in high demand even during those difficult recessionary times. And that was mobile home parks. So we chose mobile home parks as the real estate to build an investment business around, because the next time a 2008 kind of crash occurs, we and our investors want to be able to weather the storm like it did last time. We want to outperform other real estate, and we want to continue to experience that high demand in spite of those difficult recessionary conditions. So this is really a conversation about evaluation of risk. And if you look at this simple demonstration of a spectrum of risk, where the higher to the right you go, the higher the risk is, and the lower to the left you go, the lower risk is, it's really a conversation about looking for potential for loss and how severe could that loss be. So if you imagine another 2008 event shows up, the market has peaked, it's crashing. If you own something in the top right, potentially you could lose all of your money. But the further down and to the left you go, the likelihood of loss of principal becomes less and less. So all of this you're going to understand a little bit more as we go into this presentation, but we believe that mobile home parks are the only real estate that can truly survive a recession and still continue to outperform and have demand. So let's get into the presentation. What we're going to cover in the presentation here is a brief overview of mobile home parks and what they are, what makes them so different, and then how does that translate to the way that they're able to perform, where the opportunity is, both in a macro sense, but also the type of properties that we like to target, how we do things differently at 5210. And this portion, we're going to dive into some of those things that you should be looking for as you're evaluating an investment of this type. And then we'll finish up with our current offering, which is our second fund at 5210. So first, let's go over mobile home parks and what they are. The simplest way for me to describe a mobile home park to somebody is if you can imagine a giant parking lot where instead of parking cars in each one of the parking spaces, you park a home in each one of the parking spaces. So under each one of these homes, there's a parking space, and whoever owns the home on the space takes care of all the maintenance on their own home because it's their home, they own it, but they pay a monthly fee for the use of the parking space that their home sits on. And as the owner of the property, we're responsible for the clubhouse, the pool and spa, all these common amenities, barbecue, laundry facility, if there's one there, game rooms, sport courts, of course, the pavement throughout the park, lighting in the park, and landscaping. So we take care of the park, but whoever owns the home pays a monthly fee for the use of the parking space that their home sits on. Now let's talk about what makes mobile home parks so unique. So the first one is that it's the most affordable housing, and it's not even close. The next most affordable housing solution is over twice as much as living in a mobile home park. And this creates consistent high demand. So we have an issue in America with affordable housing. We don't have enough of it. And because of that, whoever has the affordable housing solution will always be in demand. And this is both in a strong economy when everything is expensive, but it's also during a recession when people are tightening up their belt and they're looking to lower their cost of housing. You'll end up with a line of people that are more qualified coming out of apartments, for example, that are seeking to get more affordable housing. The next thing that makes mobile home parks unique is the fact that the tenants own their own home. So there's no other real estate where the tenant owns their home, they take care of all the maintenance and repairs to the home, but yet they still pay monthly rent for the space that their home sits on. So this creates a really interesting dynamic where there's a difference between a homeowner mindset and a renter mindset. So in a traditional rental product, renters typically will see their housing solution as temporary. If something different comes up, they'll move. Or if something changes in their life, they'll move. All it takes is a weekend and a couple buddies with a pickup truck. Whereas in a mobile home park, whoever purchases a home is making a permanent housing decision. And their intention is to make this their community and live there for a long time. So they have a homeowner mindset. And this creates what's called sticky tenants who rarely move. So one of the most expensive events that occurs in rental real estate is turnover. So when you lose a tenant, or say they leave, you have to recondition the unit, do all the repairs, put it on the market again, attract a new tenant, and then that cycle continues over and over again. So sticky tenants are extremely valuable because you don't have the expense of the loss of income from a unit. So in the mobile home park business, once a home is sold, typically that income from the space is permanent. Even if they sell their home to another sticky tenant who's making a decision to live there, all that happened was last month, the previous owner of the home paid the parking space rent. And this month, the new owner of the home pays the parking space rent. So it creates sticky tenants so that income is very stable and it lasts perpetually. The last thing that I'm going to share here about mobile home parks is something that very few people understand. So in a traditional rental relationship, if the tenant doesn't pay the rent, they get evicted and they lose their deposit. In a mobile home park, if the tenant doesn't pay their rent, not only do they get evicted, but they forfeit their home to the park. And this doesn't make any sense. It doesn't make any economic sense for a tenant to avoid paying rent and put their home at risk. So what occurs is tenants pay the rent. And as I'll outline here a little further, you'll see what happened during COVID. And now let's take what we just covered and let's explore how that translates to the way mobile home parks can perform in a way that other real estate cannot. So when you take the consistent demand that's created by the affordability and the things that occur at a mobile home park because the tenants own the homes, the first thing that shows up is the predictability of rent payments. And if we look back to a recent pandemic during the times of COVID, when we saw moratoriums on evictions and you couldn't evict tenants across the rental properties, that included mobile home parks, But the outcome was that we were able to collect the space rent from every single space in all of our parks across our entire portfolio during 2020. So in a time where other real estate investments experienced up to 50% delinquency, where tenants were not paying the rent because they knew they couldn't be evicted, in a mobile home park, the tenants still pay the rent because they know that at the end of the moratorium, their home will be at risk if they don't pay the rent. So one of the most traumatic events that we've seen in our economy in the last several decades prove that mobile home parks create predictable rent payments. The second thing is the greater potential for appreciation. So when you think about increasing the value of a property, it's directly impacted by increasing the amount of tenants that pay rent. So in a good economy or a bad economy, it's important to know that you can still execute the strategy. So we're still able to sell homes in a high interest rate environment today. We were still able to sell homes during COVID because it's an affordable housing solution and it's always has that high demand. So in the best case scenario, you have the potential for high cash flow and high returns. But in the worst case scenario, you still have stable cash flow and you have continued demand that will allow you to move forward with the execution of your strategy. But in either case, you have lower risk and you have protection of loss. So if we circle back to the slide that I shared with you in the very beginning, which was during the crash of 2008, we saw one investment that stood out, and it was mobile home parks. The whole reason why we are focused on mobile home parks and our investors love them is because the next time one of these events occurs, we want to be able to weather the storm, outperform all other real estate, and continue to be in high demand so that we can execute our strategy. And if we again look at this risk slide, you'll see that mobile home parks on the lower end of the risk spectrum, and the potential for loss is low, and the severity of loss is extremely low. Now let's take a look at where the opportunity in the mobile home park arena is, and we'll start from more of a macro level and then we'll zoom in. So first of all, it's no secret that there's a shortage of affordable housing in this country, and that doesn't look like it's going to end anytime soon. Part of the reason for this is because the high cost of land, labor, and materials makes it virtually impossible to build something as affordable as mobile home parks. So there's really no new competition, except for that of mobile home parks. But what you'll find to be interesting is that there are more mobile home parks knocked over and redeveloped into another use than there are new mobile home parks being built each year. So we have the greatest shortage of affordable housing in this country's history, and at the same time, we have a shrinking supply of the most affordable housing. So when you take a closer look at the supply, this is a fractured market. And when I say fractured market, most real estate asset classes have been consolidated by large institutional firms that control the lion's share of the asset class. The mobile home park business has historically been a mom and pop privately owned business where it's not professionally managed. And although that consolidation has started to take place by institutional buyers, the window is still open for private ownership groups like ours to come in and buy quality properties in quality locations. Now let's talk about the type of parks that we like to acquire. So first of all, the size of the park is important. So early in our experience, and this goes back over a decade ago, we owned a handful of smaller parks, and we quickly learned that economies of scale just simply don't work on smaller parks. So larger properties give you economies of scale, and they just make way more sense. Also, larger markets. And when I say larger markets, if you compare a market where the population is declining and the job growth is not happening, even if it's a large market, that's somewhere that we wouldn't want to be. So the most important component here is demand. So in larger markets, and our focus right now is in the Sun Belt, where population is growing and the demand for affordable housing is extremely high. Also, we believe that the greatest opportunities are unprofessionally managed parks that are owned by private owners that we call mom and pops. where there's existing cash flow in the property, but they're underperforming in some manner that allows us the ability to add value and increase the property's performance. Now let's talk about underperformance. So some of the things that we're looking for when we're seeking opportunities and we're looking at potential properties that we could buy. The first thing that we look for is expenses that are higher than they should be and the lack of utility reimbursement. So in many cases in a property, you'll have a single utility line coming into the property, and then it should be submetered at each one of the spaces. But in a lot of cases, especially in the privately mom and pop owned arena, they haven't done that work. So you don't have an ability to recapture the utility expenses. Second thing that we look for is vacant park-owned homes that give us an ability to renovate them and put them for sale and grow our tenant base. Third thing we look for is vacant spaces. So we want to be able to fill those vacant spaces with brand new homes and sell them. And again, this is one of the reasons why it's important to be in the right location. So you could put a brand new home in any park across the United States, but if the demand is not there, then it's likely you won't be able to sell the home. So location is very important. Capital improvements. So in many cases, the ability or the capacity to raise rent or to sell homes or fill vacant spaces in the park are going to be hindered by the condition of the property. So things like potholes in the roads, a lack of lighting, no landscaping, just an older, tired park that needs to be brought back to life. So we look for opportunities to do that. And then of course, if you do that, it allows you to move your rents up to where the market is. In this portion, we're going to highlight a few of the things that we do different here at 5210 that investors should be looking for as they're evaluating an investment of this type. And the first of those is the deal pipeline. So it answers the question, how can investors be confident in our ability to see a high volume of deals that could potentially be acquisitions for the fund? How do we execute on this? We focus strictly on off-market transactions. So all of the properties that we've acquired to date, and this will continue moving forward, have been purchased out of the public eye. So instead of sitting at our desk waiting for listings to come across our desk to evaluate, we focus directly on talking to owners. We've built an entire owner database across all of the markets that we would like to acquire parks in. We've identified every single one of those parks, and we've identified who the owners are, and we spend time every single day building relationships and talking to owners. And then we've also built a really tight broker network. Some brokers do all of their transactions listed publicly for sale, and some brokers do transactions off market. So an example of that is that an owner is open to looking at an offer, but he doesn't want to put his park for sale. And sometimes the relationship they have with a broker allows us ability to look at that. So in all cases, the intention here is to build quality relationships with owners or brokers who do off-market transactions, so that when an owner makes a decision that it's time to sell, we could be either the only one that knows about it or maybe a small handful of people that know about it. The second thing to highlight that we do different here at 5210 is centered around business architecture. So this helps investors become confident in our ability to run our business and execute the strategy at every property we acquire. We use a business architecture called EOS, which stands for the Entrepreneur Operating System. EOS is a goal-oriented business architecture, and I'm going to show you a visual representation of the 6 components. So starting with vision on the bottom left, this represents everyone being on the same page with respect to short-term, medium-term, and long-term goals, so that we're all working together towards a common aim and we're not fighting against each other. The people component represents putting the right people in the right seat. So this goes for our employees in our office, it goes for the employees and staff at the parks, it goes for the contractors and vendors we use, and everything that we do is about putting the right person in the right seat or the right company in that seat. The data component is centered around making sure that you are tracking the right data so that you have your finger on the pulse of whether you're on track or off track on your goals. So everybody at 5210 has a number, they know what they're accountable for, and they report on it on a weekly basis. The issues component represents having a clearly defined process or method for identifying issues as they come up, discussing them, and then permanently solving them so they don't continue to get kicked down the road. The process component is about having a clearly defined methodology for everything that we do in every facet of our company, and those are constantly being fine-tuned and updated. So if you do all of those things correctly, then you get traction in your business and you move towards achieving your goals or overperforming on your goals. One of the things that we did in our business is we found that so successful at the corporate level that we installed EOS at every single property. So each one of our staff members on site at the property has weekly meetings and they go through the exact same things that we do. This allows us to ensure consistent results at the property, and specifically when something's off track, you can identify it quickly so that it doesn't get out of hand. And that what it really does, when you boil this down to something really simple, the impact is it gives us the opportunity to overperform at every level, at every park. The third item to highlight that we do different here at 5210 is what we call transparent investing. So it's common for investors to get enamored and focus on the returns that they can make, but it's extremely important to understand and be confident that you'll get your money back. And then what are we doing to protect investor capital to avoid things like Ponzi scheme? So when you're seeking an investment of this type, you certainly want to avoid the Bernie Madoff scam, but you also want to avoid sponsors who are cooking the books or misappropriating funds. And then we have to recognize that we're all humans, so that the potential to make a mistake is there. So what do we do to make sure that we and our investors avoid all of this? We use a third-party fund administrator. So our current fund administrator is Verivest out of Portland, Oregon, and the role of the fund administrator is to be the neutral party referee. So they get to report exactly what happened, where they have no vested interest in the outcome. So it's transparent. They handle all of the onboarding and the compliance and regulatory items and the security of sensitive data when new clients come on board. They also do the monthly reconciliation of bank accounts, and they do all of the accounting associated with the fund. They monitor 100% of our portfolio. So they have a lens into the entire business enterprise, and they get to see where everything or how everything is going. So any irregularity would stand out to them. And they offer transparent reporting on a quarterly basis. So each investor receives a balance sheet and a P&L and an individual member statement showing exactly what occurred. They also manage the distribution of cash flow. That happens on a quarterly basis as well. They manage the return of capital when it's time to sell properties or a refinance event takes place. They manage the distribution of profits when we're winding down the fund and selling all the assets. One final thing that often gets overlooked is what happens if you invest with 5210 and the principals are on an airplane to go look at a property and the plane crashes and we disappear. Who takes over the day-to-day business? So in a standard procedure, there would be a receiver who probably knows nothing about operations of mobile home parks, and that could turn into a bit of a disaster. So what we've done is built a succession plan with another park operator who operates his parks with EOS as well. So he would step in and take the role of the GP and manage the assets and then wind down the fund. Now let's talk about the experience and track record at 5210. First of all, we've owned and managed over 1,300 spaces. We have both mobile home and RV park experience, and that's important because many times mobile home parks will come with an RV component, or there's vacant spaces and we can use RVs in a temporary fashion to boost the income. And then of course, right now we're contemplating the acquisition of a mobile home park, and it comes with a sister RV park across the street. So it's extremely valuable to have both mobile home and RV park experience. Our track record of overperforming original projections. So one of the things that we report on a quarterly basis is where are we at today compared to where we projected we should be at when we acquired the parks initially. And we're proud to share that across our entire portfolio of parks, we're further ahead than where we projected we would be. Full cycle IRRs of over 30%. Now, obviously, past performance is not indicative of future results, but the reason that I put this in here to share this with you is because the opportunity to perform above the 14 to 16% IRR target that we aim at is real, and we've done it in the past. We're vertically integrated. So the mobile home park business is a difficult business to manage if you're not experienced at it. So if you're using third-party tools or vendors to solve your problems, you're probably not going to be able to move at the speed that you'd like to move at or achieve the results that you're seeking to achieve. So we've built our own internal property management. We only manage our own parks. So 100% of our focus is aimed at the parks that we own. We have our own internal construction management. They manage all of the major capital improvement projects that we have across our entire portfolio of parks. They also oversee the day-to-day maintenance items, making sure that everything is going in the right direction. We have our own dealer's license, which allows us to buy brand new homes directly from the manufacturer, so we're not relying on a third party on that front. And then, of course, we manage all of our own home sales and all of our marketing internally. So we're not relying on third party to execute. We get to pull all the levers ourselves internally. Now let's take a look at some of the photos of our existing parks and those parks that we've exited full cycle. Safford RV Park was the first park that we sold. The investors made north of 31% on this park. Santa Rita Heights was the first mobile home park that we sold out of our first fund. So the portfolio in our first fund currently has 5 parks, but this was the 6th, and investors made north of 30% on this one. Central Park Estates is a family park that we still own in southern Arizona in our first fund. The OGRV Resort is a 4-star gated resort community in Yuma, Arizona that we still own in our first fund. Here's another shot of the streets in that park. Melody Court is a senior 55 plus mobile home park in Yuma that we still own in our first park. Palo Verde Hills is a park on the outskirts of Phoenix. This is probably the lowest quality park that we own, but interesting, it's one of the highest cash on cash returns in our portfolio. So we still own that in the first fund. And then Country Breeze is the final asset that we acquired in our first fund. This is a 160 space mobile home park in southern Arizona. So now let's take a look at the Fund 2 assets. If you invest in the near future, you're going to have exposure to these assets here. So the first park that was acquired in our second fund is called Palm Harbor Estates. When we acquired this, there was 121 vacant spaces that looked like this. And there was 100 older or used mobile homes that were in all manner of condition. So they looked like these photos that you see here. What we've done is each one by one, we strip them down to the studs and start all over again. So essentially when we're done, we end up with brand new homes that look like this. So even though those homes are 30 or 40 years old, we can make them look like almost brand new. And the interiors are well appointed and they look like this. Here's an example of the oldest home in the park, this yellow one. Beautiful home, and it looks like this inside. Here's another example of a 80s vintage single wide that we've renovated. And all of these homes get renovated and then put on the market and sold to tenants as a permanent resident. We're also bringing in brand new homes to fill up the vacant spaces. So both single wide homes that we buy directly from the manufacturer and double wides. Each one of our homes gets brand new concrete, brand new steps, awnings, skirting, air conditioning, landscaping. So when the tenant shows up to, or a new resident shows up to purchase a home, there's nothing left for them to do. They simply move in and it's beautiful. Here's another shot of a street where almost all of the homes are brand new. And of course, you've already seen this one, but most of the homes on that street are brand new as well. The vacant spaces in the meantime, while we're waiting for home sales to chew through the park, we fill those up with both permanent RVs who stay there full time or seasonal RVs who show up for about 6 or 7 months out of the year. Here's the park that we have in escrow. This one comes along with a smaller RV park across the street. This is a 4-star gated community in Texas. It's an institutional quality asset. The spaces are wide, the streets are wide, it has sidewalks throughout the park. Many of the home sites have covered parking. Each one of the home sites has its own storage facility, so there's no need for a shed next to your home. You have your own locked storage facility that you get to use. And then there's a brand new phase 2 of the same park that's also gated. And the opportunity here is to complete the project by filling up those vacant spaces with homes in the same way that we're doing at our park in Mesa. The final portion of this presentation will be about the investment itself. The current open offering is 5210 Fund 2. So let's dive in and take a look at what the investment looks like. So first of all, we target minimum returns of 14 to 16%. What that means is that we don't acquire properties where on a conservative basis, the property can deliver a 14 to 16% return to the investors. But if we overperform like we have in the past, investors will benefit from that overperformance. There's 2 classes of interests in the fund. Class B interests require a $50,000 minimum investment, and they come with a 60-40 split in favor of the investor. Class A interests require a $1 million minimum, and they come with a 75-25 split in favor of the investor. This is a 10-year fund, which began in the fall of 2021 when we acquired Palm Harbor Estates. The initial 3 years are for building the portfolio. The middle years are for repositioning, stabilizing, and maximizing the performance of the entire portfolio. And then the terminal exit date occurs in 2031. There's 2 waterfalls in the fund. So during operations, while we own the properties, the first 6% is distributed to investors from cash flow as cash flow is available. Now, this is a cumulative 6% preferred return, which means if there's a shortfall in the initial years when cash flow is a little bit lighter, that shortfall needs to be made up in subsequent years, along with another 6% that's due that year. Once that 6% historic preferred hurdle has been met, every dollar thereafter is split 60-40 or 75-25, depending on the interest that you own. There's significant tax benefits that come along with mobile home parks. So each time we acquire a property, we perform a cost segregation study, which allows us to take bonus depreciation in the calendar year that the property was acquired. So this is significant, certainly for those people who are seeking passive losses on their K1. This will be of great value. The disposition waterfall covers sale or refinance. So when we sell properties or we refinance a property, 100% of the proceeds go towards return of capital. So once all of the capital has been returned to the investor's pockets, then the profits thereafter are split 60-40 or 75-25, depending on the interest that you hold. One of the 4 core values at 5210 is what we call best experience. So as an investor, what should you expect? And what would the best experience look like? So expect transparency and accuracy, and we do that through third-party fund administration. Expect reporting every 90 days, and you can set your watch by it. Along with the reporting comes cash flow distributions, which you can either choose to have direct deposited into your bank account, or you can choose to reinvest those so that your capital account grows over time. Expect to get your tax documents on time. So one of the most frustrating things for an investor is to have to extend their taxes every year because they haven't received their K1. So expect to receive those in March every year, and expect to always have direct access. So we believe in seamless access via phone, email, text message, where you'll have direct access to us over the life of the investment. It is our true desire to deliver the best experience in the industry, and we're constantly seeking to fine-tune our processes so that the experience gets better and better over time. As we wrap up this presentation, let's summarize what mobile home park investments are. So first of all, they're a lower risk investment that are recession resistant, so you're not putting your capital at risk like you would with other real estate investments. They have the opportunity for high cash flow and high returns, but in the worst case scenario, you still have stable cash flow with continued demand for the mobile homes in the parks so that we can continue to execute the strategy regardless of what's happening in the marketplace. They come with significant tax benefits. So those of you who are seeking to offset gains that you have incurred this year, or you're expecting to incur, the tax benefits that you'll get from an investment are very, very valuable to offset those gains. And then, of course, 5210 is an experienced operator. So we have built our business solely around mobile home parks. We're extremely adept at finding great opportunities that aren't available to the public, and then repositioning them for a maximum return for our investors. So if this is of interest in you, let's talk about next steps. This fund is for accredited investors only. We take capital commitments on a first come, first served basis. So this is a little different than how other funds operate. The next steps would be to onboard with the fund administrator, make a formal capital commitment, and then sign the documents. And when you've done that, you've saved your spot in line. So the next time we open the doors, we'll call the capital commitment that you've made. If you'd like to schedule a phone call with me, you can visit 5210.com/consultation, and you can schedule directly on my calendar. And on that phone call, we can dive into the investment deeper, answer all of your questions, cover the tax benefits if you'd like to explore that, and then evaluate the timing both for your investment and when the next opening in the fund will be. So again, to schedule a phone call with me, use that URL, or you can use a snapshot of this QR code. So thank you for participating in our presentation today. I look forward to talking with you soon.